Hello guys, this is Oba FX Trading Academy. Welcome once again to my YouTube channel. As you all know, this channel is dedicated mostly to doing top-down analysis of different financial assets. And today we are going to be looking at Deriv, a Deriv synthetic index step index 500. So for those of us that are into trading Deriv synthetic indices, I'd like you to stay on as we go through this particular index. So for those that have been following me, excuse me, you all know by now that I like starting my analysis from the higher time frame and working it down to the minute time frame where we can get possible trade opportunities. So currently I'm on the monthly time frame, and one thing we can all observe here is that this particular index, because it was added by Deriv on the 1st of April 2024, we do not have a lot of data to go by. But however, one thing I was able to do with this particular index, or that I was quickly able to do, was to at least get my key zones. For those of us that do not know how to map out key zones, there's a video on the channel that explains that explicitly. Okay, so what I can see is that this particular index had been in a downtrend for a while. So you can see it made a lower low, lower high, lower low, lower high. And this the most recent lower high has just been taken out. So we have like a lower high here, giving us a lower low, and has just been taken out, with market making a retracement down and already being rejected from this key zone. However, just like I said, each candlestick on the monthly time frame represents 1 month. So each candlestick you're seeing here took 1 month to play out. So the next best thing to do would be to go to the next lower time frame, which is the weekly time frame. Now, on the weekly time frame, the market structure we talked about from the monthly time frame becomes more visible. Now, how do I mean? We can see here that this was a low, a low, a lower high, a lower low. The market made a lower high, ranged a bit, made a lower low, lower high, then finally made a lower low. Now, this particular lower high responsible for the creation of this lower low was taken out, indicating that the market has broken its initial structure of making series of lower lows and lower highs. And after taking out this particular lower high, the market created a new high and made a retracement downwards. However, instead of retracing downwards to give us like a new lower low, we can see here that it is currently trying to move back upwards. Now, how do I mean? If I'm to map this out, you can see that there's a big bullish engulfing candlestick pattern here, where we have like a green candle covering completely a red bearish candle. So this is the bullish engulfing candle. So this is a part of this whole chart that I'll be paying proper attention to. So to go over it again, I can simply put like a trend line here to indicate to us that the downtrend had been exhausted. So the market kept making lower lows and lower highs. So the major lower high that gave us the lower low has just been taken out, and the market has made what? A retracement. However, we can see the bulls trying to push the market upwards. So our first indication that this market wants to continue going upwards is this bullish reversal candlestick pattern. So the next thing to do would be to go to the daily time frame. Now, on the daily time frame, we can see something interesting. So because we said we're going to be concentrating on this part of the chart, because this on the daily time frame, that's where we get the most recent trend of the market. In other words, that's where we get the most recent happening in the market, not the monthly or the weekly time frame. Now, on the daily time frame, there's something that jumps out to us. Or first of all, if I go back to the weekly time frame, for those that have been following me, you understand that I like using three major tools for my analysis: the trend line, support and resistance, as well as the Fibonacci Retracement Tool. So if I should even include my Fib tool here from the swing low to swing high, we can see that price is currently at our Fibonacci Retracement golden zone. And that golden zone is the zone between the 50% and 61.8%. Now, within this zone, let me take this out. Within this zone, we can see that price is already being rejected within the zone to continue upwards. How do I mean? And that's where this candlestick, bullish candlestick reversal pattern, which is bullish engulfing, comes in. And to make it more interesting, we can see price also retracing back down to within the engulfing candle. So I just wanted to state this out here by adding our Fibonacci retracement tool to buttress the fact that we are actually at a key zone where price can actually be pushed back upwards. So we'll go back to the daily time frame. Now on the daily time frame, we can see that the retracement we saw on the weekly time frame is what we have here, and that's market making lower low, lower high, lower low, lower high, lower low, and the market is currently going upward. So I can come here also and add my trend line. So from what we are seeing here, we can see that this trend line has just been broken, and also excuse me, the lower low, the lower high that gave birth to um the last lower low, this lower high give this low gave birth to this lower low, has just also been taken out by this big bullish candle. However, we're currently close to a very, very strong resistance zone. So the question would now be that which I always ask, which is how do I take advantage of this current happening in the market? So the next best thing to do would be to go to the H4 time frame. Now, on the H4 time frame, we can see that the market went up, made a retracement, and is currently doing everything it can to continue upward. So what do I do to look for my entries? I put a trend line here. And one of the entry model that we adopt in an analysis when it comes to trying to take trades is the use of a counter trend line. Now, when do I get to use that counter trend line? We can see that the market is currently coming downwards. This is our original trend in which we are hoping to get market opportunities. So if I should take this out, because it was an indication of where price was taken out, and zoom in closely, then I can adopt my first model of taking entries, which is the counter trend line model. It means drawing the trend line in the opposite direction of your original trend. To make my chart cleaner, let me take this out because of no use now. So now this is the H4 time frame. We can see that the counter trend line has just been broken. I can now go to the 1 hour time frame to see if I have a trading opportunity here. So if you ask me, I would say yes. I'll be jumping into this trade now because this trend line has just been broken. And if I go further to the 30 minutes time frame, it has not just only been broken, it has broken and retested. So I'll take my trade now and I have my stop loss here. So depending on when you get to come across this particular analysis, this is a very, very viable trade. My first take profit point would be this zone because the price might get to play a lot around the zone. So my first take profit point would be this zone, and if this zone is broken, then I can just try to hold the trade to continue going upward. So if I come back to the H4 time frame, so if this zone is taken out, then we are all clear to come to this zone. So what I'll be doing would be to enter this trade now slowly. What I mean by slowly, using very, very small lot size. Observe it for it to get to this place. And if it takes out this zone, then I can scale in and see it rise up to this particular area. So this is my outlook on the new synthetic index, step 500 index. So if you're into trading this particular financial assets, you can compare this with your own analysis and make your decision as to whether it makes sense to jump in or not. So Like I said, this is a trading academy. We're open to account management, mentorship programs. So whichever you feel you need at the time, you can always reach out to us via the contact on my YouTube bio. Thanks a lot to those that have been supporting this channel from day one. I do not take you for granted. I can see the channel growing gradually by way of subscribers. I'm super, super grateful. Enjoy the rest of your day and cheers.